have a huge raft of earnings coming from major U.S. companies this week. On Wednesday, we are expecting numbers from Meta Platforms, eBay, also OpenText in Canada. On Thursday, we're looking out for results from Apple. So it's going to be busy on the results front. And look at that, the market cap of companies reporting this week, something like $20 trillion. Let's get more from Pierre Ouimet, Head Investment Strategist at UBS. Pierre, we're going to be just deluged here, as if we weren't busy enough with the election and the fallout from that. What are you, in particular in the tech sector, what are you looking out for this week?
Well, first of all, Andrew, nice being here and nice talking to you. On the tech side, we're kind of focused on AI, quite honestly. I mean, that's been kind of our main thrust for a while now. It's a trend within, it's a long-term trend, which is sustainable. And, of course, we hit the gyrations in the market, which tend to be more cyclical or otherwise worse than that. And but I think the long-term trend is still intact. I think we're looking at 2026, something in the order of $500 billion worth of capital spending in that area. And, of course, it's heating up as well. As you notice, Huawei now is looking to develop a chip. So there will be competition in that area, but it's going to open up a whole new set of opportunities, really. So we view that as a secular trend, which investors should position themselves to benefit from that.
So your strategy right now is look for opportunities to get into stocks, seek sell-off opportunities, for example, but also bear in mind durable income can be a good idea. I guess you mean a dividend in particular?
Yeah, well, within the tech sector, I think we're looking at some of the more solid players in the area. They'll tend to benefit over the longer term for sure. So I'd be a little bit worried about. It'd be interesting to see the results of Meta Platforms, for example, this week. I mean, a lot of those. Google is another example of that as well. Is a lot of that is dependent on advertising revenue, and to what extent that could potentially be compromised given a softening global U.S. economy, So that's kind of I'd rather focus on, companies that got kind of a solid business plan, also have a solid franchise. I'm thinking about companies like Microsoft, for example, that will benefit from that franchise and be able to deploy on top of that some of the new products. One interesting name this week would be actually Amazon, to see exactly what's happening there, because very economically sensitive. I guess you could probably say it's somewhat of a proxy for the industry to a large extent, a little bit like Walmart would be for bricks and mortar retail. Amazon is kind of a proxy for e-commerce. And things, I think that'll be kind of an interesting result to see to what extent the current slowdown, if there is a slowdown, which seems to be not quite materializing for the time being, how that'll impact on Amazon. Or maybe it's a second quarter story, and it might be a bit premature to anticipate things out of there, because there's a lot of preemptive buying going on right now, so it kind of muddies the waters, which is it's really confusing because companies are building inventories ahead of tariffs, and consumers are spending ahead of tariffs as well. And when you look at the hard data, it's not clear that the economy is softening, but you look at the soft data, it's not a pretty picture.
Right. Amazon, we're expecting their numbers on Thursday as well, May 1st. What about, you've got some long-term themes here, including aging in comfort. Now, what do you mean by that as a long-term investment theme? In part, is that senior housing, senior accommodation, or nursing homes? Or what exactly would you mean by aging in comfort?
And leisure as well. I mean, that's it's all part of the comfort industry. But yeah, clearly, senior homes and healthcare in general. I mean, healthcare is an area we like a lot, and I think those are areas that will be sustained going forward because of the demographics. And it's not only in the U.S. I mean, this trend is global in nature. So, you can invest obviously in U.S. pharma, but there's a whole slew of the European pharma stocks as well, which will benefit from that particular thing. But also leisure. Baby boomers, those that remain healthy and don't need health care will, I guess, will obviously be in a position to benefit from vacationing, cruise ships, and things of that nature as well. So it's kind of a composite of a whole bunch of things, really.
You also talk about the food revolution. Now, of course, some people might say, well, we should just be eating spinach and hummus and minimally processed stuff. But what are you getting at with the food revolution?
Well, we're seeing kind of the fine edge of that, which what's happening in the U.S. with RFK Jr. And I think there's a revolution coming, or we think there's a revolution coming in nutrition in general. A move towards more healthier eating and kind of a refocus on the fundamentals of what really makes the body tick from a large example, from a general perspective as well. So it's kind of part of it is healthcare, but it's sustainability of healthcare. And obviously, nutrition is a large part of that. And where you source it, how you source it, and what are the ingredients that go into it. And in general, the avoidance of processed foods and return back to more healthy eating in general. I think that's people will be seeking that in a much more profound way in the future.
Well, that'll be a challenge for businesses, isn't it? Because, I mean, processed food is essentially less healthy than something you actually buy in the produce section. So how will businesses square that circle?
Well, it's hard because, processed foods are a lot easier as well. You stick them in the oven and away you go. It's like if you're buying a lettuce or a broccoli, you have to, chop it up a little bit and heat it up. And there's more work involved in that. So it's a hard sell. But I think as the population ages, there's a lot more concern about that and what goes into your plate and eventually ends up in your stomach as well. The whole realm also of the chronic disease and the impact that has on our populations, and the source of chronic disease as well, which a lot of researchers are starting to identify as being a lot of it starts in our plates and metabolic in nature. And that I think will be also part of the a little bit of, call it a food revolution. It's not really a green revolution, but it's a food revolution, and I think that's going to be important in the years ahead.
Apparently, it's interesting. I mean, as you know, the Japanese are among the world's most long-lived people, but apparently the Spaniards are catching up to them, and they have very different diets. The Spaniards love their processed meats, their wine. Who knows? Maybe it's because the Spaniards get out and socialize more. Anyway, it's always going to be complex.
Yeah, absolutely. Yeah, there's a little bit of mystery there with processed meats in particular, which, that's not necessarily part of this food revolution. No. But, it's eating healthier and eating more natural foods, I think, is something that's going to be somewhat of a challenge going forward. And the companies that can meet that challenge will stand to benefit from it, because I think that's what the consumer today will be asking for.
Yeah, I should say the Spaniards love their ham, but of course some of it comes from pigs fed on acorns, so that's a special case. Pierre, we better leave it there. Pierre Ouimet joining us there with some themes. Head Investment Strategist at UBS Canada.